All right, welcome to another episode of the Hearse Chaser podcast. Today, we're talking about what I like to call secret money, life insurance. It's secret money because, well, sometimes it's there, sometimes it's not. You don't really know. It's not really money that you can have until you're gone. And we're going to talk about just my thoughts on life insurance in general. I want to say that these are only my thoughts. I just recently got stabbed yesterday to get some more life insurance, so it's very fresh on my memory. So I'll talk about why I did some of that, why the Hearse Chaser got some more life insurance, but also talk about how life insurance interplays with your estate plan. So we've got a lot to talk about in this week's episode.
You're listening to the Hearse Chaser podcast show. Here's your host, Stephen McClellan.
All right, welcome back. Like I just said, I went through the process of getting some more life insurance, and this is, I think, my third time doing it, and it's not fun. I don't like blood at all. My wife is the healthcare provider in our family, and she is not scared of that. But for me, when it's mine, it's not fun. And so I have been milking it for the last 24 hours with my family. My daughters saw it when I picked them up yesterday after school. They said, "Daddy, what is that Band-Aid on your arm?" And um, I didn't say this. I thought about saying, well, that's so mommy doesn't cry at daddy's funeral. And they said, what? No. I said, well, that's that daddy had to give blood for life insurance. And then I had to explain to young kids what life insurance is, which is a difficult thing to do. I think what helped them understand it was it is money that we give monthly, and if I die, then there's a whole lot of money for mommy and the family. And I said the thing is, I had to give blood because they're not going to give money to somebody sick. So if I were sick and not healthy, then a company wouldn't do that. So there's a chance that the company's never going to pay mom any money because I'm probably going to outlive that. So I'm just going to give money every single month. So it's kind of hard for them to understand the perspective of us giving money we won't get anything out of, and at the same time, if we pay some money, get a whole lot of money. But that's generally how insurance works. And I know that there's a difference between term insurance and whole life insurance. And I think it's important for the Hearse Chaser not to go too in depth on which one is right for you. So I am a big proponent of me staying in my lane and talking about estate planning and elder law and say, without question, you should really sit down with an insurance agent or a financial advisor and talk about that in relation to your whole estate plan. So I want to say just a couple things generally. A lot of people will tell me, oh, I've got life insurance with my work, and that's wonderful. What you have to keep in mind is if you leave that job, you leave that life insurance. So I think it's good that everybody gets their own policy. I will say that. That's portable. You can take it wherever you go. And generally, it is cheaper to get that insurance when you're younger than when you're older. Okay. This is probably the last round of life insurance I will get in my lifetime. And the insurance I've gotten is not whole life, it's term. And the idea is at 65 or 70, whenever I pass, uh, if let's say if I die, that money, if I'm after 65, well, I've already built up my wealth, and there's money there to take care of my wife, and we've raised our kids, that sort of thing. The big fear for me is what happens from now till 65 when I retire. Is there enough there to cover for the kids, to pay off the house, all those things. Now, I was looking at my life insurance policy. The very first one I got when I was a wee lad, it actually goes to the age of 100. I didn't know that. So I thought, oh, that's great. So if you have a policy, all right, make sure that you know where it is. All right. I don't know if you know this, but I don't, there's like $1 billion worth of life insurance out there that has never been collected. And if your family never asked for it, those insurance companies are not giving it away. Okay. That's a very important thing. You spend this monthly payment, which adds up a lot over the years. And if your family doesn't know about it, then it doesn't help them. Okay. And I say this especially to my clients now that are 65 and older because many of them bought these policies when they were 20 or 30. And so we're talking 30, 40 years ago, pre-internet, you know, and just very important to get that copy of that policy, scan that policy in, and let the family know where those policies should go. Now, um, a lot of my clients buy burial policies that kind of work like life insurance, or they'll have like a 10, $20,000 policy that's really kind of a burial policy. In most cases, what happens is they have the funeral, they have the service, they have the burial, and sometimes that money doesn't come in right away. It comes in on the back end. So funeral homes know that, and they typically work with you. So I think it's a wonderful thing. It's just ensuring the future. Nobody knows what the future is. I'll tell you something interesting. So I'm a private pilot, which many of you might know in other contexts. And when I was sitting down with my advisor, we were talking about, well, do I want to cover if I'm in a plane and I'm flying and I go down? And the difference, get this, was like $5,000 difference between the policy or the policy with me flying. So I said, okay, I'm going to exclude that. Uh, Pilots like me who don't fly like in the aviation world, like every day, those pilots, it's not going to affect them as much. It does affect me because I don't fly as much as they do. So that's the one thing that is a caveat on my insurance. And you can also have other kind of exclusions on your policy as well. But I had to go through the whole process, asking a bunch of questions and all that good stuff. And I've like I said, I've done this at 3 different phases where we've added a little bit more. And that's just because, it's when I before I had kids, it was just my wife and I. I really didn't need much insurance, but when you have a bigger family and it's more expensive, you kind of have to increase your life insurance. Now, this is an old concept. I actually wanted to know, when did this start? It is ancient Rome, apparently like in 600 BC. Okay. They had burial clubs. That sounds like a fun club for the Hearse Chaser to be in, where members paid into a pool to cover each other's funeral cost. Burial clubs. That's kind of fun. We that's kind of what our life insurance is. Most modern, the way you think of life insurance started in with London, the Royal Exchange in 1583. And and according to an ownership gap, 51% of Americans have life insurance, a lot through work. And then 40% say they need more coverage. Okay. Very important to talk about that with your financial advisor. And when you're thinking about getting more insurance, you got a million things going on, right? I got kids to take care of. You're working hard all the time, and then boom, you got to get some more life. It's hard to find time to do that. Um, so what I want to talk about is, well, what does life insurance have to do with estate planning? And it has to do, there's a lot of good takeaways here when you're thinking about your estate plan and things that you can do with life insurance. The first thing I want to say is a big thing that we promote is setting up revocable trust. So if you're not aware, the idea is that instead of my life insurance going directly to my 3 kids, it would go into a trust and then go to my kids. Okay. But there's a huge difference, a massive difference between just going directly to the kids, which I call a blind transfer. Blind transfer, which means insurance company doesn't care anything about my kids. They write a check and they're done. Okay. Whereas if it's in a trust, the money goes into a trust, but the trustee who knows my family is going to say, wait a second, maybe we give this money out and maybe we don't. Okay. There might be some circumstances that could arise in the future. So when you have beneficiaries on life insurance, if you do, and that's all you've done as far as an estate plan, you really need to ask some questions. What happens if one of my three kids predeceases me? Because it might say on life insurance that it goes to the survivor of them. Now, having talked to many clients over the years, most of my clients, I mean, overwhelmingly, 80% say that if a child dies, I want their share to go to their kids. And if your life insurance says rides of survivorship, nothing would go to their descendants. So nothing goes to their grandkids. And they may really need the money. So you might say, well, hey, listen, that's fine. If my child dies, I'll just go back to my insurance agent and I'll change it. There's two problems with that. Problem number one, there's a lot of people that sell insurance, like they sell it for a few years and then they stop. Okay. Um, Certain companies, there's a lot of turnover. If that's the case, your insurance guy may not even work there anymore. Number two, let's say they still do. You're assuming that you're going to be able to make changes. Okay. If you're incapacitated, if you're in the hospital, you have a stroke, or if a kid dies 3 months before you and you're sick, you're probably not going to want to make a change. That's why I think a trust is better, because if it dumps into a trust, then I've already sat down and talked to you about here's the plan, the game plan, plan A, plan B, plan C. So there's a lot of planning when it comes to that. Now, the beautiful thing about a trust from an administration standpoint is this. Only one child has to call the insurance company, collect the money, and then disperse the funds. Okay. So instead of all three of my kids having to get their third, a third, a third, just one person is responsible for that. That's great.
Thank you for tuning in to the Hearse Chaser podcast show. Our mission is to be your first choice for last wishes. Want to dive deeper? Join us over at the Hearse Chaser Academy, where we've created 8 on-demand courses for each stage of life. From young adulthood to retirement, navigating separation or blended families, and everything in between, we help you plan for the future, no matter where you're at. Now stay with us as the ride continues on the Hearse Chaser podcast show.
And let's think about it for a second. Life insurance sets in the trust in this bucket bank account. It's in a bank account, in a trust banking account, and your trustee is going to say, wait, do I have any like final expenses I have to pay? Like, let's say there's some property taxes. Let's say there's some income taxes, because a lot of times there might be a tax bill due. Maybe the funeral is going to be paid out of that. So we're going to take those expenses off the top and then divide everything a third, a third, a third. Again, if life insurance says just give it to the kids, there's no guarantee that that middle child is going to agree to pay their pro rata share of those expenses. They may just say, I want my third, and sayonara, okay, to the other beneficiaries. So it allows, I think, for a better plan. Moreover, let's say that you named your kids as a beneficiary. That's very common. If your kids are young, that first, if they're under 18, that's a problem. Okay, so the insurance company is not going to write a check to third grader Sarah. All right, here's your $100,000, Sarah. And she's like, what is a check? So a problem, if your life insurance says that it goes to descendants, let's say it's great. It does say it goes to descendants. Or let's say you put a minor on there. Well, a lot of times the insurance company will say, before you deposit this check, you need the parent, the surviving parent, needs to get a guardianship over their kid in order to deposit the check. You say that is ridiculous. I am their kid. I'm their parent. I'm their parent. That's my kid. Why do I need to open up a guardianship account for my kid? Well, that's the way it works. Okay. These companies are writing large sums of money and they want to make sure that when they write a check that there's a guardian appointed to receive that money. So sometimes you'll just open a guardianship of the estate just for that money. I read this law. I learned this like 4 years ago. I didn't know this was a thing, but if the total amount for that kid, let's say that kid shares 15,000. Arkansas has some language in its guardianship statute that says if a kid's minor's guardianship estate happens to be under 15,000, you can dispense with the guardianship and just tell the judge, "Hey, I'm the parent. I'm going to be managing the money." So a lot of times in this context, it's the surviving parent, which is probably not your kid. So your kid dies, so the money goes to the grandkid. Well, who's going to be the grandkid's guardian? Likely it's going to be your daughter-in-law or son-in-law managing the grandkid's money. And that may not be what you like. Okay, let me say that again. Most of my clients prefer money managed by family, by their blood. So if I put the money in a trust, likely it's an aunt or an uncle that's managing the money for the niece or nephew. But if you just leave it to a kid that's a minor, your daughter-in-law or son-in-law is going to get guardianship over them and manage the money, and then you're worried about with them commingling or those kind of things. Okay. The last thing I want to say about life insurance, okay, and this is a good one. A lot of times there can be post death planning. So when you're gone, if we have a trust, I can do some post-death planning because let's say you got 3 kids, one's a doctor making 400,000 a year, one's a stay-at-home mom. There's going to be a very big tax difference between those two. Sometimes if you divide everything a third, a third, a third, well, that's probably not divided in the most tax efficient way. So it might make sense to give the child who's in a higher tax bracket more qualified money and the child that's a stay-at-home mom more of the qualified money. And you can do that with life insurance. Okay. Life insurance is also helpful when I need liquidity. Maybe the home is your biggest asset and then you have life insurance. Okay. Maybe this pot of money helps that child live in that home. Okay. I'm kind of cautious about giving a home to a child that can't afford a home because I'm thinking, okay, it's expensive to have a home. And well, that liquidity I think can help them. But you have to be kind of mindful that there's going to be ongoing expenses. So that's a good thing. Now, last beautiful thing to say about life insurance is this. Okay. Well, there's 2 concepts I want you to think about. One, when we're doing asset protection, we're talking about the nursing home. A lot of people have their life insurance set up where it goes to spouse first and then the kids. All right, in some contexts, you may not want the money to go to the spouse. Like if they're going into the nursing home and you're trying to protect assets, well, don't dump more money on them. Okay. So you might want to change the distribution to go to a trust or out of their name. That's very important. Um, and um, and secondly, I can't remember the second thing. I think that was just the concept. I think I was thinking of it in more than one way. Just making sure that, oh yeah, I know it was this scenario. Let's say that there's a husband and wife, husband dies, and he names the wife as the beneficiary. Okay. He dies and the money goes to her. If she's incapacitated, she may not even collect the money or think about the money, or she might collect the money and have the check staying around, or she might put it in a new bank account. Who knows? When that money is received or the process of getting that money received, the power of attorney can be very helpful. The power of attorney can help mom get that life insurance money. And let me just tell you, it's a pain. Okay, I didn't mention this, but it's been a pain. Some companies are better to work with than others, but some are really difficult. And I suggest if you're collecting, what we often do is send things certified. So you know that they got it. and there's proof that they got it, we always make a copy. Anytime we send a letter to an insurance company, we make a copy so we know exactly what they got. All right. Very, very important. And most of the time, we as attorneys are not involved in that. I think the financial advisor, insurance agent helps you with that. That should be what they do. But a lot of times it's kind of a mess, to be honest with you. So those are just some considerations on the back end of life insurance. And I really think when you buy life insurance, you should start with the end in mind. Why are you getting it? But when you get it, let's talk about where it actually goes and be very clear. Let the family know, because you simply don't want it to go uncollected. So it is secret money, because sometimes it's a surprise and sometimes people don't realize they have it. And when I talk to clients and say, what do you have in assets? And we start talking about it, they're like, oh, well, I guess if you had my life insurance, I've got, well, way more money than I thought. So don't underestimate the use of life insurance. Be very clear of how you want to use this money in the context of your overall estate planning. But more importantly, make sure you talk to someone. Go get stabbed, go get checked out. It's worth it to make sure you take care of your kiddos. From the Hearse Chaser, who's hurting just a little bit in his arm, hope you have a great rest of your day on this crazy, this crazy trip we call life.
Hey, thanks for listening to the Hearse Chaser podcast show. Please remember, you can't outrun a hearse, but you can leave your family with a smooth ride.